Good morning, traders. Welcome to Tuesday of this beautiful week. Kind of Monday, but actually Tuesday. Make sure to swing over to ssftg.com/brief to grab your morning brief levels. Before we jump on in, as always, we need to check the news, see what's going on today so that we're not taken by surprise by anything. Looking at the news calendar, there's not a whole lot going on, really. We've got some medium news announcements at 8:30 with the New York Empire State Manufacturing Index, forecast to 6, previous was 3.5. At 11:10, we have FOMC member Broman speaking, or Brauman, whatever. Not really much of a mover there, but it's something. At 1500, we have FOMC member Daly speaking. And then at 1600, we have the tick net long-term transactions for December. So there's not really a ton going on in the news calendar. It's all a bunch of medium and small news announcements, but we've got a few speakers. Usually doesn't do much, and we're coming in off of an extended weekend. Probably going to be a relatively slow day, but like we were talking about on the weekly brief, it's getting really constricted, and well, it could use an expansion again. So first up to the party is going to be the NASDAQ with its kind of weekend gap to the upside. With this weekend gap, it has not been filled. That is still waiting to get filled in. And along with that, after that gap up, this is what is sort of creating the wedge high. And because of that, that's not really the best type of wedge. Typically, you'd prefer a wedge to be coming off of more of a solidified or anchored high, but the fact that it just gapped up to it doesn't really prove anything. Now that the market has reconfirmed it, that helps a lot. So now we can definitely say, yeah, maybe at first it wasn't so sure, but we definitely have a wedge on the highs here that we can work with, and a lot of traders are utilizing that. And now we have a bit more of a confirmed wedge. Still have a wide open gap as far as the swing gap goes. The market just kind of broke away from there, and it's still also looking to fill in the previous gap. The big thing that's standing out here is, although it is pulling back, in the big kind of grand scheme of things, it really hasn't done much. We had that gap up, and now we're just going sideways. So with that sideways price action, realistically, that is just a situation that could be going and creating sort of a base of support. And if the market wants to come back to that area, it'd be around 13,830-ish. Obviously, what would look a lot nicer is if it consolidates for a little while and then hits it way over here, but that is potentially days away before something like that happens. So buyers will be looking to buy the fill on this gap, but it's a pretty wide open door if it can't start sustaining, and then we see it slide all the way down to the wedge. Over next on the S&P with a similar situation and a weekend gap and a breakout move, but the big thing that stands out as a difference here, the S&P looks a lot stronger. We don't have any channels or anything like that it could be pinging off of unless you zoom way, way far out. But here we've got a nice little wedge. They broke out. They ramped into the weekend and breaking out aggressively into an L1, which is very obviously being defended given the amount of support that's coming in there. Big zone of interest, obviously, psychological 4,000 is not too far away anymore. Still got a good 50 points to go until it hits, but it is there. And now that people have kind of seen it and are starting to hear more about it, it becomes more and more of a self-fulfilling prophecy. We'll see. Across the board, we do have some pretty nasty divergences coming across the highs, which could lead to a deeper pullback if the buyers can't sustain the support in here. If the support doesn't show up enough to bounce the market out and it starts chopping through the lows, that's when we could see it start really swinging back down to start filling in some of that previous volume. And if we draw the point of the wedge out, which is usually where the volume node is, that would put a major objective back around 3,900. And 3,900 certainly isn't a low, small volume area either. Lots of things pointing to buyers needing to hold this, or we could be standing on a cliff. On gold, we've got some nice consolidated wedge movement going on here. The highs of the wedge haven't been tested for a little while. It initially kind of started back here and came close, but hasn't really hit it again. And that's what a lot of traders are probably waiting for, because this is also a very nice sideways consolidation. And you'll notice it hasn't really hit any of that either. So if we can get a retest of the highs, that not only confirms the wedge top, or reconfirms it rather, but it also re-solidifies previous structural resistance. And that is where sellers will be trying to get that push to the downside and get a break below the wedge to try to chop it down. Now, if buyers are looking to come in, Realistically, buying low makes a lot more sense. We haven't tested the wedge lows in a while, and what would make sense from a bull's perspective is to let the slide down happen so we can get a dip back into the L4, L5, and then come back in and try to shove it back up. So gold, a lot of buyers are going to be waiting for those deeper dips, because right now where it is, it's just smack in the middle of the wedge, if not potentially at the highs of a smaller range. There's a lot of issues with wanting to buy right here rather than a little bit cheaper. Over on crude oil, or Flag City, whatever you want to call this thing, although the flag is getting a little bit extended, typically when you're looking at a flag, right, you want to see a flag that is short-lived. That's a good flag, and then getting a continuation back to the upside. This is starting to turn into a banner. This is getting a little bit long here. We've got the nice little flag pull, and this would have been a great example of a pennant formation, which is kind of a flag, just a little bit smaller, and then a breakout. You can see it consolidated for a small period of time and then continued. Here, we've got this really strong rally up. It was looking like a flag, then it was kind of looking like a flag, and now it's sort of looking like a banner, and it's just getting a little bit too long. So if the bulls are going to show up, they're going to need to do it sooner than later, and now it's becoming a bit of a concern that a lower high ends up standing up. This could also just be a big pullback to refill the weekend gap and the $60 mark. So, you know, by no means are the buyers completely out of the out of their element. This could very much be their element that they've been waiting for. But if the buyers can't support and we start seeing lower highs and it starts rolling back over, that's where a lot of problems begin, where traders start getting dunked on, and we see it sliding all the way back down towards, you know, sub 60s, obviously way down towards the 57s. Over on the euro, with a nice bullish continuation, spike into a channel, and that spike in channel from the weekend. There's no weekend gaps or anything, just good continuation. Overall, it is a little bit extended at the highs. It's always a bit of a concern to see it at the top of the channel and then breaking higher again. With this strong movement to the upside, there is minor candle gapping, there's minor swing gapping. It would suggest that bulls in the short term at least have a good amount of strength. That said, we're running into a lot of resistance up here, and this is not an area where a lot of buyers are going to be thinking, hey, this is great value, time to jump in at the top, right? Hoping that it goes a little bit further. It just doesn't make sense here. What would make a lot more sense is seeing the market pull back a bit further. These pullbacks have been typically very small. If they're longer lived, it typically doesn't even really pull back. It just goes sideways. But the pullback that does happen, you can see, is relatively either this size or twice that size. So if we measure those moves up, we've got that initial pullback right here, and so far we haven't really even had that yet. This is begging for a pullback. The market is overextended. We're at the highs, and it just doesn't make sense for buyers to want to be coming in up here. So on the shallower side of things, looking for a dip back on the euro back to the bottom of the channel would fit almost perfectly. And on the wider side, from the top way down to that previous bigger pullback, that could put support all the way back down to the 1.21s, maybe even a little bit underneath it. So lots of interest, but all of that interest is farther down. Over on the cryptocurrency side, with Bitcoin in a very big chunk of consolidation, it does still have sort of an upward trend to it, but it's very, very sideways. Lots of choppiness. Buyers are buying on the dips and not really doing a whole lot on the rips. Once it gets back to the highs, there's a lot of profit taking. That could be because we're at all-time highs. Nobody knows what the heck to do. So when we get back to a previous structured high, what better spot to take some profit? We do also have the big psychological level of 50,000 up there, and the concern is that we front run that 50,000 up to that, you know, those Walmart blue light specials of $49.99, $99, and then fade off. That's the same thing that they did ahead of 20,000. The market went up to $19,999.99, or whatever it was, depending on your exchange, and then slumped 80% all the way back down to 6,000. So, you know, is this going to be the same thing? Do we see Bitcoin fail off 50,000, slump 80%, and then go back up a year from now? Or have we cleared high enough into 2021 in all-time highs that we've now established a strong enough bull trend? This is where we're kind of establishing that kind of concept. A lot of traders are obviously taking profit, but when you see these higher highs, higher lows, what ends up happening a lot of times is you'll see volume building in here and building in here, and a lot of selling and a lot of selling and a lot of shorting. and then it breaks higher, that's when the squeeze happens. That's when this thing could go from 50,000 to 100,000 in 2 weeks. In a week. That's when things can get crazy. Is that going to happen right this second today? Probably not. But that is something that you do want to keep in the back of your mind, where if this is going to light the rocket boosters, it's going to do it above that 50,000 because that's going to be the big psychological break. While we're staying underneath it, we're a little bit of a concern. I don't want to buy way up here. I would rather buy on a pullback. And then finally over on Ethereum with a pretty gross looking wedge, but there's a couple of reasons why I still like this wedge high. One of the big things is that when it tried breaking out of it, it held as support. And when it failed back down and broke higher, it acted as resistance. Then it broke higher, acted as support. Then it broke down, acted as resistance. Regardless of whether or not I like this channel high or trend line high or whatever you want to call this, it doesn't matter if I like the way that it looks. The market's responding to it. So I have to give it the benefit of the doubt. That said, I would prefer, if I had a choice, to give a wider wedge a little bit more perspective. So that's what fits at the moment, but the market is responding to the narrower wedge. The big thing that we need to see next is, do the Bitcoin buyers defend down, or I'm sorry, the Ethereum buyers defend in these 1700s, the 1780s, 1760s. Every time the market's dipped into that zone more recently, it's either been aggressively defended or aggressively dumped on. And, well, we just more recently aggressively defended, but we haven't seen any of the follow-through. That's what happened last time. The market came down, defended it really aggressively, but then failed the follow-through and then dumped through it. Well, that's kind of the concern right now. If the buyers can't show up to the party and hold this thing to the upside, are we going to see that dump back down? And that would put support down in the 1660s, potentially even a little bit lower. So big zone of interest here that we're going to have to wait and see how it wants to turn out. And you could easily see as well how this could slide into a megaphone looking for some really, really extended lows. And that certainly doesn't help the case for the bulls. All right, well, that's going to do it for today. Like we always say, stay safe out there, keep those stops in play, and let the winners run. I hope you have a fantastic trading day, and we will see you all in the next. Thanks.